Financial health is the only way that you have as a financial services provider to actually control the quality of your customer portfolio over time. If you are building financially healthier customers, you are building better customers over time.
Welcome to the Galileo Financial Technologies Podcast. I'm your host, Scott Henderson. We're here to delve into the thrilling world of fintech and banking, exploring the latest trends, innovations, and disruptions. Every episode features insightful chats with industry leaders and visionaries who are pushing the boundaries of finance and banking. Whether you're passionate about fintech, running a startup, leading a large bank, or just intrigued by financial technology, this podcast is your go-to source for staying ahead. Let's dive into the future of finance and banking together. All right, welcome to the Galileo podcast booth here at Fintech Nerdcon in Miami 2025. Here we are. How's it been for you, Alex?
It's been great. This event in particular, Fintech Nerdcon, has felt like kind of the event equivalent of an early stage startup. Does that make sense? Like a lot of energy, a lot of like raw excitement and just like ideas bouncing off each other at high speed. It's felt very startup-y in kind of the best possible way.
And maybe give the listeners a little bit information about who you are, your background, and what you do.
Sure, absolutely. So I write a newsletter called Fintech Takes, which analyzes the intersection of financial services, technology, and public policy. So it sits at the intersection of those three topics. It's also a podcast, and we've started doing events and other things. And it's really just an opportunity for me to indulge my curiosity about this space. Like fintech just moves so fast, and there's so much stuff happening. There's always new events. There's new technologies like AI and stablecoins. There's always new things happening from a regulatory perspective, and there's no shortage of things to learn about. And I've found that the best way to learn is to write and to talk about things because it forces you to have a take and really learn and know what you're talking about. And so I've been doing the newsletter for the last 5 or 6 years. Before that, I had about 15 years of experience working in fintech, both as an operator at large and small fintech companies, as well as an analyst studying different parts of the financial services ecosystem. So I've been in the space for about 20 years and doing the newsletter for the last 5 or so.
And you just had your, I believe, first event in Montana, right, for some fintech founders. And how did that go?
It went great. It's similar to Fintech Nerdcon in the sense that we wanted to try to do something different. And different is hard because people are used to a certain set of things, right? We're used to going to Las Vegas. We're used to walking around the Venetian. I can't tell you, I'm too used to walking around the Venetian. I see the Venetian in my nightmares at night, right? And I wanted to do something different. And so I'm from Bozeman, Montana. That's where I'm based. And so what we did was we rented a ranch outside of Bozeman in the mountains. There's no cell phone reception. We didn't think there was going to be Wi-Fi. We booked it at the only time we could get the ranch was in November, which if you know anything about Montana, like we could be under 3 feet of snow in November. And Montana's really hard to get to, right? There's not a lot of direct flights, and everything about the event was designed to not be convenient, which is the opposite of Money 2020. And our goal was to try to create an environment where you had to want to come. I had an attendee who came to the event last week whose flight got disrupted by the shutdown, wasn't able to make it to Bozeman, but he was able to make it to Salt Lake. And then he rented a car and he drove from Salt Lake City through Yellowstone to get to the event in Montana. And the thing that was nice about that and imposing that level of inconvenience on people was it's self-selected for people who wanted to be there. It's self-selected for people who really took the time. They blocked out their calendar because they didn't think they were going to have access to Wi-Fi or their cell phones. And they were so present. And we got to talk about the biggest unsolved problems in financial services for a couple of days in the mountains.
I love that.
Yeah.
And I agree with you on what you said about the Venetian. It's crazy how they have it set up where you could be there for 3 days and not see the sunlight. And then when you finally come out, you're like, whoa, this is nuts.
That's exactly right. The number one piece of feedback I got was that after my event, and I imagine people are going to feel similar about this one too, people felt energized, like they had gotten energy from the event and inspiration from the event. And I don't know about anyone else, but when I go to Money 2020, as productive as it is, I don't feel like I'm getting energy coming out of that event. I feel like I've lost all my energy and I need to spend another week recovering. And so our goal was to try to capture a different energy, capture a different vibe, and hopefully provide a differentiated experience.
Yes, and we're in the final stretch of conference season here. I also met you at an AI native banking and fintech conference in Salt Lake City where we spoke for a little bit.
Yeah.
So let's dive into the topic here. So
Sure.
Embedded finance.
Yeah.
It's been a buzzword for a while. means different things, I feel like, to depending on who you're talking to.
Sure.
But I just want to understand from your perspective, what is your definition of embedded finance and how do you think about it in your role?
Yeah, to me, embedded finance, very simply put, is putting financial products and services as close to the context of where the end customer needs that financial product or financial service. One of the things about working in financial services that I find really interesting is we all work in the industry, and so we think of our products as being like essential, right? And they are important. But the thing we have to remember about pretty much everything in financial services is our product is not the point, right? Our product is an enabler to the thing that the customer is actually trying to do. Use lending as an example. You don't want to get a loan. You want whatever the loan is for. You want to pay your employees if you're a small business. You want to buy a house if it's a mortgage. You want to buy a car. You want to buy a television. You want something else, and the loan is just the tool that enables that. And when you think about that, and when we allow ourselves as an industry to be honest about the fact that our product is not the point, then that allows us to think in terms of, okay, what is the actual context of what the customer is trying to accomplish? And how can we put our product as close to that context as possible? And to me, that's what embedded finance is, right? It's putting the product or service in the context of what the customer is actually trying to do. Auto lending is the best example. Auto lending, 70-80% of auto loans in the US are through car dealerships, right? You don't go to your bank to get a car loan and then go to the car dealership. You go to the car dealership, you pick out the car you want, and then you just want to get the financing in the dealership. Now, anyone who's bought a car in a dealership knows it's not the most enjoyable experience. The F&I guy is always not easy to deal with. They're trying to cross-sell you more things. But fundamentally, the reason that indirect auto lending or embedded auto lending is the dominant distribution model in that space is because it's the most convenient context for buying a car. You're never going to convince someone to buy a car online because they want to test drive it. They want to go down to the dealership. So that's the context in which you have to sell an auto loan. You can expand that thinking to cover any financial services product. And what you'll find in 9 out of 10 cases is that the customer would actually prefer to get it in the context of the activity that they're doing. This applies to lending. It applies to payments, right? None of us enjoyed taking our card out of our wallet, handing it to the taxi driver, having them swipe it, having them hand it back to you, ask you what the tip should be, fill out the tip, get a receipt, then get out of the cab. None of us enjoyed that experience. The purpose was to get in a vehicle, get to our destination, and get out and get moving to the thing we were doing. Uber enables that. Lyft enables that by embedding payments within that process flow. And by the way, when they embed it, the payment disappears. We don't even really think about it. So I think a lot of embedded finance is eating direct finance because at the end of the day, almost all financial services products need that level of like contextual embedding to work their best. The interesting question, not to divert us from your outline, is what's the 1 out of 10 example? You want to go there?
We can go there real quick.
So real quick, I've done a bunch of like consumer surveys and other work over time asking consumers, okay, if we assume embedded finance is the model everybody wants, what are the exceptions to that? What use cases could I give to a consumer where they would say, actually, I would prefer to go into a branch, or I would prefer to get this from a bank or a fintech company directly, rather than just getting it embedded in the workflow of what I'm doing. There are 2 products that consumers seem strangely reluctant to get in an embedded context. And this is consumer, not small business. Business might be a little different. In a consumer context, the 2 products are a bank account and insurance. For whatever reason, and I haven't quite gotten to the bottom of this, consumers are very reluctant to get a bank account from something that doesn't look like a bank. I think that has to do with the fact that your bank account is where your money is, and you have a different level of like trust and a different bar you want to assess for making that decision. So if you were to ask me, will embedded channels overtake direct channels for the distribution of deposit accounts, bank accounts? I actually don't think so. I think banks, neobanks, fintech companies will always have an edge over non-bank companies in distributing bank accounts because there's a level of trust that you need there. Insurance is the other one. I assumed when I started doing this research, consumers would say, oh man, I don't care about insurance. Like I don't need to have like a direct relationship to my insurance provider. I just want to get it in the context of I adopted a pet from the shelter. I'd like to get pet insurance, right? Like that type of distribution model would make sense. And what consumers say in surveys, at least the ones that I've done, is actually with insurance, it's again more of a trusted decision-making process because I'm trying to mitigate my risk and I'm trying to make sure I'm getting the best price. And so the point of all of this is just to say embedded finance tends to eat a lot of distribution channels over time, but it's not universally true, and you have to understand the value that the product has in the life of a customer and how they think about it before you think about how you're going to distribute it.
So the value in the life of a customer is a great point. And that's something I've learned listening to you. You definitely, not necessarily obsessed, but you're very focused on...
You can say obsessed.
Maybe obsessed, right? Of the end consumer.
Yeah.
And whether or not something is good or bad for that consumer that might be overlooked by a corporation or even regulators but at the end of the day, like, where does that come from for you in terms of like why you've focused on the consumer?
Yeah, it's a hard thing to analyze the industry and try to figure out like who the winners and losers are going to be, or figure out what's important and what's not important. And to be totally candid with you, I would be a horrific VC investor because I have no idea what the market is going to value in the short term. I just can't. I've tried to predict it in the past. I've done a little angel investing from time to time. I'm horrible. I'm really bad. But my thesis is that over a long enough period of time, the companies that win, the products that win, are the ones that dedicate themselves to solving actual customer problems, right? And over a long enough period of time, customer value is really the only metric that tends to win out. And so my framework for analysis and how I do my job week to week is to always anchor on what problem is this solving for customers, what value does it provide, and if I can't get a clear answer to that question, or the answer is a bad answer, right, I would say a lot of the stuff that happens in crypto, a lot of the stuff that happens in wealth management right now, the rise of prediction markets, none of this is good for consumers. And that's not to say that there's not a lot of money to be made there in the short term, but long term, we know what's going to happen because it's not aligned with the best interests of customers. And by contrast, you look at something like financial health, which is a topic I'm really obsessed with. And it's always been funny to me because the industry has always treated financial health as if we focus on that, it's really us just doing it out of like charity or out of the goodness of our hearts. Like we just want to help our customers. No, wrong. Financial health is the only way that you have as a financial services provider to actually control the quality of your customer portfolio over time. If you are building financially healthier customers, you are building better customers over time. So when I talk about financial health, I'm not saying do this out of the goodness of your heart. I'm not saying do this as charity or as some sort of give back to regulators. I'm saying do this selfishly because you are a capitalist organization and you want to make money. You just have to think about it over the long term. And there's a great quote from Jeff Bezos where they asked him how he predicts the future and how he makes decisions. And he said, the thing that's hard is predicting what's going to change in the future, right? Because technology is always changing how we do everything. But he said what's much easier to predict and what's easier to make investment decisions on is what's not going to change. So if you're looking at a business and you're trying to understand what is important, you have to look at what's not going to change because there's always things that don't change. Consumers always want convenience. Consumers always want value. Consumers always want to save money. There are things we know are going to be true forever. And when Jeff Bezos says that, like, he is able to make long-term investment decisions that go well beyond a quarter or a year or 3 years, and that's because he has that long-term view. And so that's the same type of view I try to take, aligned with what's best for the customer.
I love that. And along those lines of financial health, I listened to the conversation you had yesterday with Mr. Open Banking.
Yeah.
And one of the things I wanted to understand a little bit more was the hyper-personalization of somebody's personal finances. And we're living in obviously a time where AI is a hot topic, but I think a lot of companies, fintechs, banks, want to know how to leverage AI to be able to create a hyper-personalized experience that ultimately benefits the end consumer in their financial health. But a lot of times companies lose sight of that. It's what's going to bring the biggest benefit for us as a company, but there's so many use cases and things that you can start to explore and do that move us all as an industry forward towards actually hyper personalization. But I want to understand like your thoughts a little bit more on how do we get there?
Yeah, I think we're at a moment with AI and the technology that we have where we can start to ask some really interesting questions that we've just never been able to ask before. So for example, one of the ones I've been thinking a lot about is when I open an account with a financial services provider, why is it that I don't have a personalized AI agent that is spun up at that moment that I open an account that's just my concierge for the entirety of my relationship with this company. And anytime I have a problem, it knows what to do. Anytime I need to escalate an issue, it helps me escalate it. And it just sits there and assists me. Why don't we have that? Historically, that would have required an actual relationship manager, a human being, to do that work. And by the way, what I just described, that's how personal banking works, right? That is how private wealth management works. If you're rich enough, that's exactly the experience you get and have gotten for years. But for everyone else, we had to make do with calling the call center, going on the website, and going through FAQs. We had to go through things that were designed to manage scale and to be operationally efficient, but it wasn't the best answer from a customer service perspective. Now we have AI agents, right? Now we have agentic AI. So why is it that when you're going through the onboarding flow for opening an account, the last step isn't spinning up your own agentic AI assistant, that for that relationship you have with that institution, not just that product, by the way, but for every product you have at that institution across multiple P&Ls and lines of business, you have one agent that is your dedicated resource to helping you navigate your relationship with this company? There's no reason we can't do that at scale now. We can do that right now, today. And by the way, that's not going to get anyone into massive regulatory risk, right? Because it's not touching actual decisions. It's not touching credit risk. It's not touching Reg E. It's just helping customers better navigate your own internal systems and your own products and better understand how to work with you. That's something I think every customer would want. It's something that they already have in private wealth management. And so to me, that's just one small example of we need to start thinking differently and more broadly now that we have these new sets of tools that are available to us.
100% agree on that. And when it comes to a consumer wanting to leverage AI or these agents and allow them to act on behalf of what they would be doing, how should fintechs and banks be thinking about enabling their consumers to interact with these AI agents in a way that's sustainable but beneficial for all parties?
Yeah, I think, again, you have to take an enlightened self-interest approach to this question, because the temptation with agentic AI is going to be, can we use agents to manipulate our customers into doing things that are good for our bottom line in the short term? That is going to be the temptation, right? And when I look at things like agentic commerce, I see a lot of that type of thinking in agentic commerce right now, where it's hey, you know what customers are really struggling with? Buying shit that they don't need online. So what we should do is we should spin up AI agents to make it even easier to buy shit online that you don't need. To be honest with you, and I think everyone who's listening to this will feel the same way, I'm a great e-commerce shopper, right? I am so well optimized already. I don't have a problem with that, right? Every need I have to buy stuff I don't need online is already perfectly well taken care of. So when I think about agentic commerce, I think about it more in terms of what's something I struggle with when shopping online? What's something that I struggle with when I'm navigating the financial services ecosystem? It might be the opposite of it, right? It might be, hey, I looked for this product. The product I found is one I really want, but it's a little too expensive. I don't have the wherewithal or the ability to wait and to not buy it, but to monitor it every single day to wait for a price drop until it's something I'm comfortable buying. As a human who's busy in the world, I have kids and a busy job, I don't have time to check every single hour of every single day when the price of this thing drops to a certain point. That's a use case for agents and agentic commerce that I really like. Help me be a more thoughtful consumer, right? And so to me, I think the overall frame you have to take as a company with agentic AI is tacking away from what is going to help us improve our margins or our sales or our revenue in the short term, because there's a million ways you could use AI to optimize for that goal. But I think that's not aligned with customer value. I think the better direction to go is, what are things our customers struggle with, where if we help them, even if we don't make more money in the short term, or quite frankly, even if we take a little money out of our pocket in the short term, it makes us stickier, it improves our retention, it improves word of mouth, it lowers our acquisition costs for bringing in new customers. To me, that's where you should go directionally with agentic AI. And then I would say more operationally in terms of how you implement it. I was having a conversation with someone a couple of days ago, and they were talking about how they were thinking about implementing agentic AI within their workflow. And they were saying, human in the loop is an interesting phrase, because I think we all want humans to be in the loop. But the question is, if you're drawing a loop, where in that circle do you put the human, right? And so you don't put the human at the very beginning of the process because you want AI to do the initial research, to go figure out what all my options are and narrow it down. You also don't want the human at the very end of the loop, because human at the end of the loop means, okay, I figured everything out, now all the work gets dumped on the human to do, and the human doesn't want to do the work. The human wants to be involved at the authorization phase. And the authorization phase is actually a very narrow part of the loop, but it is the most important part of the loop. It's where the trust is created. And so when we talk about human in the loop, you have to visualize, what is the loop? What is the action we are taking end to end? And where in there is the point where we don't want to take control out of the customer's hands? And where is it that we can enable that control by giving them all the information they need to make a decision, and then all the assurance that the decision they made is going to be executed in the manner that they instructed us to do, but not put any work for that onto them? That is the idealized, I think, operational form of agentic AI. It's going to look different for everyone because every workflow is different, but I think that's the right way to think about it.
And you brought up the dilemma between, when it comes to unit economics, how do we get something launched quickly and start providing value faster?
Yeah.
Compared to the long game where you really do focus on the end consumer and the customer and trying to really truly help them. As fintechs, banks, as things continue to contract in a sense where unit economics become more and more important, almost like a flight to quality, I guess you could say, for some of these companies that want to grow.
Yeah.
What should they be thinking? Like, how do you actually put together a framework or strategy in terms we need to show some results short term, but like building for the long term as well?
Yeah, I mean, I think on the short term results, because you're right, you have to make a business case, and it's really difficult to get investment in something where you're like, yeah, the payoff for this is going to be 25 years from now. Great. Like, all of us will be retired or moved on to a different job. We're not going to be here to see the payoff of that, even if the shareholders want us to think in terms of long term. So you have to find shorter term wins. I think as it relates to AI, I think the short-term wins are almost all operational efficiency, right? And liberating human beings from drudgery that they shouldn't be spending their time on. And that doesn't mean you have to cut employees, right? We saw Klarna go through this, where Klarna made a big deal prior to their IPO of, we're going to cut 700 customer service agents, we're going to cut all these marketing people, we don't need them. And then the CEO kind of walked it back and said, actually, turns out people actually like talking to people. What we're really doing with AI is refactoring our customer service process so that we don't have to continue to hire as many customer service agents as fast as we were, and the customer service agents we have get to spend more time on fewer calls. That's better for everyone, right? And that is significant efficiency savings. That is significantly reducing your investment in human resources over a period of time. Those are savings you can take back to help make a business case. And I think almost in every financial services business, there's still so much fat to be trimmed that AI can help with, that's where you make the short-term business case. And then the long-term alignment with the customer is, okay, if we're going to make money, if we're going to generate revenue through AI, how do we make sure the revenue we're generating is aligned with creating value for customers? So to me, cost savings, great short-term benefit. Long-term, if you're trying to make revenue, you want to align it with the interests of the customer.
I love that. So yesterday you had a chance to be on the panel of judges here at the Vibe Coding competition.
Yes.
Did you have any aha moments, anything that you were like, holy crap, this could change? What did you learn from that process, and what did you see coming out of that?
So first of all, coding is now available to everyone, which I think I knew academically, but it was pretty cool to walk around and see like product managers who can't put a hammer to a nail, who can't code at all, building products, not just speccing out products or talking to customers or having ideas, but like building the product using AI coding tools. That was pretty cool, right? And so I think democratizing even the ability to build proof of concepts, right? I don't know, we've all heard horror stories about people putting AI generated code directly into production. Might not want to do that, but even the ability internally, if you think about a hackathon, hackathons used to involve a team of people because you had to have a product person who could think about the value that needed to be created. You had to have a software engineer or two who could actually code up the prototype. And you had to have a marketing person or someone to wrap the story and the so what around it. Now, a hackathon is a single person thing, right? Like it is one person who has all of those skills and the coding is provided by the AI. So that was really cool to see in practice. I would say the other thing that was neat about the hackathon, I'll just shout out one of the companies that finished in the top 3, was this app that they built called Campfire. And Campfire is a basically Airbnb for reserving national park campsites. You all would want that, right? That's pretty cool. And the thing that was really neat about it was I was like, okay, where's the connection to Plaid? Because the whole idea was like use Plaid's API in some place. They just plugged Plaid's API in for the bank payments, pay by bank for when you're reserving the campsite. So the Plaid integration was actually very small, but the person was thinking in these like broader terms because, again, if you have AI, the world is just a series of APIs for you to use now. And so they looked at it and they were like, there's an API out there for campsite availability from national parks. I can plug that API in. I can plug a different API in that tells me what the weather is going to be at different times of year in all of those locations, so you can show real-time weather updates. And we were only doing the hackathon for 6 hours or something yesterday, and this app was gorgeous. It was functional. And every single one of the judges who reviewed it was like, I would use this tomorrow if it was in production. And so I just don't think it was possible to build what I would consider to be like fintech adjacent apps, right? This isn't a fintech app, but it was fintech adjacent. It had pay by bank integrated into it. It's just never been possible to build stuff like that fast and just unleash people's creativity. And it was pretty cool to see examples of that just happening in real time.
For sure. Yeah, you get to see so much in such a short period of time, but it's also exciting to think about the possibilities within organizations as we start to experiment and run more of these things. And even individual run companies that we've been hearing about, there being billion-dollar companies with 1 or 2 people at some point, and I'm sure that this is a step along that path.
It moves us in that direction. I think the interesting question is going to be with company building, where are human beings going to insist other humans be a part of this? And I go back to the Klarna customer service thing. It's funny. AI probably could replace customer service agents. It probably could, right? It could probably figure it out. We've all wrestled with all these different AI chatbots. Sometimes they make mistakes, but usually you can get them to eventually figure out what you want and to do it. The reason that we want human customer service agents is because aesthetically we prefer it, right? It has nothing to do with the actual outcome. It has everything to do with the experience. And so when people talk about a one-person startup, I just don't think we're ever going to get there. Not because it's not technically feasible, and Sam Altman's thing is technically feasible. We could have that right now. All true. The reality, though, is customers vote with their wallets for the type of experience they want and the type of companies they want to work with. And humans tend to vote for humans over machines, has been my experience. And so I think what you might see in the future is leaner organizations for sure. And I think there are whole divisions of companies where we've just stuffed humans back there because we need someone with reasoning capabilities and the ability to patiently work through complex problems, but the work sucks, it doesn't provide any value. Like, those places are going to be liberated. Humans are not going to be trapped in those back offices. But I do think that human beings are always going to be central to companies that scale up because customers are going to insist on it. And that's going to be true in a B2C context when we're having customer service interactions. It's going to be true in a B2B context too. When you're buying software from a company for your company, you want to go out and golf with someone, right? Like, that's not going to magically go away just because we have AI agents. And so I think it's worth having a little bit of reality attached to that, even with these advances in technology.
Alex, what you've shared with us today has been super insightful, and we really appreciate you taking the time to share all of these thoughts with us. Where can people learn more about you and what you're working on?
Sure, yeah. So Fintech Takes is the name of the newsletter. If you just go to fintechtakes.com, we have newsletters on fintech. We have a new newsletter on banking that we just launched with my colleague Kia Haslett, which we're very excited about. And you can find the Fintech Takes podcast wherever you listen to podcasts. So appreciate it.
Awesome. Thanks for being here again, and we'll talk later.
All right. Thank you.
This podcast has been a production of Galileo Financial Technologies with all rights reserved. The content is provided for informational purposes only and is not legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information. You understand that any reliance on this information is at your own risk.